You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to, watching the Financial Survival Network. It's a Monday Meltdown special. It's June 13th, 2022. The markets have no place to go but down. Everybody is piling out of the markets, which is just proof of the old maxim, never bet against the Fed. And Chris Vermeulen, our good friend, thetechnicaltraders.com, is with us to give some illustrations and put this whole thing in perspective. Chris, welcome back.
Hey, thanks for having me, Kerry. Always a pleasure.
So where is the market heading here? How low is low enough?
Yeah, that's a big question. I mean, let me share a couple charts here and we'll take a quick look at what the different assets are doing. If we take a look, you should be able to see my screen there, my chart.
Yep, it's there.
And if we take a look here, we can see the SP 500. I mean, it's a bloodbath today. What a huge sell-off. Russell is down over 5%, NASDAQ down 4.3, SP 500 down 3 3/4. I mean, we are selling off. We haven't seen this, since way back here in early 2021. So we're definitely seeing panic in the markets. And I follow the New York Stock Exchange volume flow, and we've spiked over 170 shares being hit on the bid. So people hitting the market button to sell versus one being bought. So everyone is running for the door. And to put it into perspective, anything over 3 is usually panic selling. And so we're at 141, which we haven't seen probably since the COVID crash. I'd have to zoom back on it. Don't have it on this chart, but we are seeing definitely some very big panic. And the problem with panic is that almost everything goes down. You see commodities, anything that people think is a defensive play like precious metals, everything just gets beaten up and sold off. And today's the type of day where margin calls are going to be creating a lot of this sell-off. Even if people don't want to sell their positions, they're forced to because they're underwater. And the only thing bucking the trend is the US dollar. I've talked about this a lot. It's pretty much the best play out there, either cash or playing like UUP, which is the US dollar index ETF. When we've got blood on the streets, when people are nervous, people move to cash. They move to the strongest currency, and that tends to be the US dollar. So when we look at this picture of how far we could go, it's pretty ugly. I think we could still continue to see a pretty big drop. In fact, if we were to look at this recent sell-off, and using Fibonacci extension and the rally, it's telling us we could see the SP 500 fall all the way down to pretty much 3,400, which from where we are today, already down 3 3/4. That's another 9+% drop, which would bring us right into the middle of this big consolidation, this kind of bull flag pattern here we saw in 2020. So there's still a lot of downside. And just keep in mind, some of the biggest moves percentage-wise in the stock market happened, in the last few bars. So we could see some huge volatility, big washout low happen over the next couple of days or couple of weeks, depending how long this takes to unfold. So there could be a lot more downside yet. And then from there, we'll get a bounce. And the big question after that is how much lower can we go? And I think we're entering a multi-year bear market in equities. So this could be something more like the 2000, 2003 kind of bear market. It takes a long time to unfold. It's going to be painful for those who just kind of hodl. They hold on for dear life and do things the old school way and just ride it out and sweat it out. But it is a painful, very painful experience. In fact, there's a company out there that did research of the 2008, 2009 financial crisis, and they came to the conclusion that there were 6,566 suicides across multiple nations because of the financial crisis and the rapid decline in equity value. So this is a serious start of something very serious, not something to take lightly. And protecting capital, moving to cash is one of the best things you can do. And I've been preaching that since February, when more or less we started to move to cash. And we've been sidestepping all this because this is a time where it'll make or break you, and it can change where you are and how soon you can retire, or if you can retire, depending on how you take action. So this is pretty important price action that's unfolding this year. It's got to be handled delicately and avoided, really.
And I want to make another point here. Back in 2009, actually December 11th, 2008, that was the day that Bernie Madoff was arrested. And he'd been pulling his scam for many, many years, eventually died in prison, but waiting for the Bernie Madoffs to hit, because there's got to be a lot of them. Mm-hmm. Today, you see that this, what it's called, Celsius crypto platform is insolvent. They've suspended all transfers and withdrawals. And I just wonder where the frauds are going to be. Where's the Bernie Madoff of crypto or kleptocurrencies? I've warned you for years out there. There's a lot of kleptocurrencies out there. Look at Bitcoin, and I know you follow it to some extent, Chris. It's absolutely getting slaughtered. It's trading 2/3 below its high when it double peaked, as the chart so eloquently demonstrates there. Mm-hmm. And just draw a line. Tell us where you think it can go.
Yeah, I think the crypto space, it's kind of like the Wild West of assets. And I can only imagine there's going to be so much corruption coming to light, things blowing up, platforms vanishing. It's going to be pretty gnarly. And I think we're finally just starting to hit that point. This breakdown today, when we hold, I mean, the next stop here, I've got 21,000 as the first downside target. We're getting there pretty close today. And then we drop down to around 13 to 12,000, 11,000 range. It's going to be, I mean, there's a lot of downside potential here. Bitcoin is in a bear market. It is in sell-off phase. It's going to be huge volatility, but I think there's a lot of unwinding to do in this market. Typically, when you have a big breakdown, a big panic wave like we're seeing today, a lot of times it can rebound very quickly for a little while, have a bounce for a week or so, maybe even for about several weeks before it heads lower. Just like we saw in this recent sell-off. We saw a sell-off. Let me just zoom in a little bit here. You get a sell-off, and then you kind of get a little pause, and then you get a sell-off, and you get a pause, and now we've got a sell-off, maybe a couple more days, down days, but then we're going to probably flag out into a sideways consolidation. That's typically just how the markets move. But I think there's a lot of downside potential, and the level that we're hitting right here, this is where like so many new coins, new platforms came out. They've lived and survived through this price range, but now we're piercing through that and we're going down, and everybody's going to be, most people are going to be underwater. And this is where losses and things start to implode. So today, I think, is a tipping point day this week for probably the crypto space, where there's going to be a lot of pain. And as you said, the Bernie Madoffs could come out of the woodwork here. And a lot of people who think they've got a lot of money in crypto realize they can't even get it if they have it, or they're going to lose it if it drops, another technically 50% from where we are now, almost pretty much down to 11,000. So it's pretty painful experience.
And with Bitcoin, I need to emphasize, as price goes down, liquidity goes down. So right now, everybody is dumping everything. You see gold absolutely getting slaughtered, silver down nearly $1 today. As people run for the exits, oh, well, my crypto, I can just sell it right now. I'll just sell it off on Coinbase. And from the time that you place that sell order on Coinbase to the time the trade actually gets executed, especially if Tether, which I don't want to get into the details of, is in trouble, you could lose a fortune. And the other thing I want to point out, if you just go back to Bitcoin for 1 second, this is a case of the ABCs of reading charts. If you could just zoom out a little bit so we get the first top. All right, so just show us how it was obvious to many of us out there that when it hit those tops, it was time to dump.
Yeah, I mean, you don't really know it's time to dump until it starts to break down. It depends on your time frame, but when you get double tops that are very close, very kind of symmetrical in terms of they've got very similar kind of width about them, double tops are pretty dangerous. Really, when you start to break down, when you start to break a level like this, where a significant sharp pullback and then a rally to new highs, when you get a strong breakdown below it, and then it consolidates, creates a bear flag. This is a very bearish sign, and it points to whatever this move was to the downside is what you're going to see as the follow through. These pauses here, these bear flags, are known as the halfway point. So you have another drop, and then you have another bear flag, and then you have the second half of that drop, which ended up extending even longer. The grand scheme of things, you look at this giant pattern, this is a great big bear flag, and it is pointing to much, much lower prices yet to come. So definitely a lot of went from a bullish phase to a kind of a topping stage 3 phase where it's trading sideways, big volatility. Now it's breaking down. This line across here is very important, and it's starting to move lower. In fact, I created a infographic here to show this in a little bit more detail. If we were to just let me zoom out a bit here.
That's a great graphic there.
If you take a look at this, so this is the way it works. The market has 4 stages. There's a stage 1, which is a basing stage. It's trading sideways. It's red because it's out of favor. It's choppy and dangerous. Stage 3 is very choppy, high volatility. It's dangerous. You generally don't want to be trading or investing at those points because it can be wasted time. Sometimes we'll see commodities like gold be out of favor for 5, 6, 7, 8 years. You're better to move that somewhere else. Where the opportunity is a stage 2, advancing stage. You've got a trend, you've got direction, you can play that move. The other opportunity is in a bear market, stage 4 decline. And that's where you get follow through on these breakouts. So we're kind of right now in this stage 3 topping phase, just starting to break down. And we're getting into an opportunity here where you can avoid the bear market by just moving to cash. You can take advantage of these huge, powerful trends and actually, grow your account during this phase. So we're coming into a prime time. Really, since March 2021, we've been in this kind of stage 3 topping phase. Small cap stocks have struggled. Miners, Bitcoin, all those things have really struggled. And now we're coming into the next opportunity where big money's made on advances and declines. Sideways chop is dangerous, it's choppy, it's tougher to trade. And so that's kind of gives you a visual of where we are. And I think we're headed into another big drop here in Bitcoin and the markets. And it could last several years. You look at what the value of commodities compared to the SP 500, they're at the lowest value compared to the SP 500 that we've ever seen in history. Last time we were fairly close to this was in 2000. Everyone was in real estate, in stocks. And from there, we saw gold rally up until 2011, 2012 peak. And we are in that same super cycle right now. I think we're about to see them precious metals do very well. But when we have a bear market, precious metals will kind of get sucked down a little bit and struggle until the big panic wave selling ends. And then I think we're going to see, the exact opposite of what we've seen recently, where everyone's in crypto, they're in technology, and we're going to go back to the basics. We're going to go back to just buying chunks of metal, and the market is going to totally flip. So it's going to be interesting. Go from something that's virtual to something that's physical. It's going to be one extreme to the other, I think.
Yeah, the commodities super cycle still in effect?
Yeah, I think the commodity super cycle is still going to be in effect for potentially 3 to 5 years, maybe even longer. I mean, we just started the super cycle more or less in 2019 for precious metals. So they've started, but they haven't had their big run and their big, huge growth phase yet. They're building that base, that launch pad. But this market needs to probably cleanse itself, and it'll probably pull metals down temporarily, just because panic, margin calls just creates forced liquidation.
I mean, when you see gold go down and the dollar go up and the market go down altogether, and virtually every asset class, with the exception of dollar, actual cash, then a liquidation is underway, and then you wait for the shoes to drop, and that's going to be hedge funds and crypto platforms just going into obliteration. And then if it gets too bad, the Fed will have to step in because they've got the authority now. If you remember, under Dodd-Frank, they can now intervene with non-financial players, non-banks, which includes hedge funds. So expect to see a couple of humongous hedge funds just bite the dust. Can you just look at Tesla for us? because Tesla is kind of the bellwether stock of the past 2 years. And ugly chart, but, now we've broken through 700. And where's the next point that we need to be concerned about?
Don't just survive, thrive. The Financial Survival Network.
Fury Gold Mines is a Canada-focused exploration and development company committed to aggressively growing its scalable, high-grade gold assets with major drill campaigns planned across its 3.5 million ounce portfolio. Fury is led by a management team of proven explorers and developers with a track record of success in advancing and financing project development. Fury Gold Mines is well positioned to create value for investors with low-risk development growth and the potential for a new major discovery. Fury Gold Mines trades on the TSX and NYSE American under the ticker FURY. To learn more, go to furygoldmines.com. That's furygoldmines.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Yeah, Bitcoin's taking a beating. It's the next key level is going to be somewhere right down around here. This is around the $550 level area. I think it could hit that very easily here. That'll be a level that if it closes below it, like on a weekly basis, it could be lights out. After that, I mean, we could see a big unwinding back down to 400, potentially 350 going forward. So, I mean, it's a crowded trade. Everybody's in it, and even I think some of the hardcore owners who love it are starting to feel the pain of the pullback, and it could get a little more painful and create a big washout where everybody just finally says, you know what, I'm kind of done with Tesla for now. Crowded trades eventually have a huge washout when everybody finally gives up on it. And it'll be a great opportunity, but they will be selling it at a huge discount, and it'll probably snap back and have a very strong rally down the road. But it's got more downside for sure.
Hey, so buy the car, sell the stock.
Yeah.
Hey, so, all right. What else should we be looking at now, Chris?
I mean, when we take a look, let's just take a look over at crude oil here. If we take a look at crude, I mean, we've got the problem with inflation and war and the energy kind of crisis. I think we're going to continue to see crude oil hold up in this range. Now, this is a huge range. As soon as war kicked in, we had this massive war spike. It has come back down, but I think we're going to continue to see energy trade in a very big range here for several months. And obviously, this is going to be one huge factor in people tightening up with their spending. You know, the inflation is absolutely nothing I've ever seen. And I got a feeling it's going to get a whole lot worse still. So I think people need to bunker down and realize that these prices that keep going up are going to continue. I mean, we're starting to see weekly earnings continue to drop week after week after week. So people are making less each week. The momentum here of, everyone getting huge paying jobs and you can't find any labor, all that is coming to an end. All the CEOs are talking about now is recession. Jamie Dimon, everyone is talking about, super dark times ahead. And you and I have talked about it many times over the last several months that we can see it coming. It hasn't started yet. Although I would argue now that I think it actually has started because I see it everywhere. Everyone is tightened up on their spending. You can feel the dynamic shift among people's mentality and their spending, what they're doing. Obviously, we need another quarter of GDP of kind of contraction, and then we're full on recession. So I think things are going to be tough, and I think commodities are going to continue to hold up and be very strong. I think for a long period of time, and that's going to really hurt the inflation side of things. And
I would make the argument, Chris, that because the inflation rate is so understated, that we've actually already had 2 or 3 negative real growth quarters. And that means we're in the recession. And the other thing I would mention is when oil gets over $80, $90 now, recession is baked in the cake. It's just baked in the cake. Do you have a nat gas chart you can pull up? Because that's even more impressive. Yeah, nat gas has been on fire. It's got crazy volatility. The Widowmaker is a It is a dangerous pattern. This thing, I've talked about it. It could explode up into the low teens. If we were to go back, we'll go to the monthly, it'll give us a really quick view. But the way this chart pattern is on the daily chart is telling us it is going to crash, and it's going to be an epic, probably crash back down to 6 or 5 very quickly, or it's going to just go parabolic and take off. And we're going to see a huge spike up into the low teens
before it reverses. And it's a real crapshoot of what's going to happen there. I think it has more of an opportunity to spike than crude. I kind of feel like the momentum for crude is stalling out, and it won't do a big spike, but natural gas has got that potential that it could totally do that. So it is definitely a dangerous commodity to play with this type of volatility.
Yeah, I've followed nat gas very closely. To me, it's more important than crude oil in many respects. For years and years in the US, we had thousands of shut-in wells, because it was not economical to sell dry gas, meaning you have two types of nat gas: wet gas, dry gas. Wet gas trades closer to the price of oil. Dry gas doesn't have the distillates in it, what they call casehead gasoline, so it trades at a major discount to wet gas. Now, every dry gas well that can produce in the United States is producing. 20% is getting exported. All of this bodes for a major implosion here. And
yeah, is the wet gas, is that the liquefied gas, like the tanker gas?
Yeah, well, so what they do is they put nat gas under pressure, that liquefies it, also known as propane. They do some other stuff to it.
Gotcha.
When they take wet gas out of the wellhead, it's got all sorts of liquid gas, they call it. And they use that for a lot of things. Natural gas is a primary feedstock for fertilizer. So when you look at all these things coming, I would not be shocked by $15 nat gas in the least. It's already trading, $20 in Europe.
Yeah.
So, all right. So what are the best trades that you can do right now besides being in cash to weather this storm, Chris?
Well, I don't think there is a great trade. I mean, right now we're still, the way I see the markets, the time frame I focus on, we've been in cash for a couple of months. We did do a quick trade in April for a little gain there, but overall we are in cash because everything is pretty much going down. And this is one of the things I believe in. No one should be holding assets that are falling. You should have stops in place. Same with the COVID crash. I mean, we got kicked out of trades on the way down. We got into bonds, had a huge play. It really, to me, it comes down to managing positions and risks. So if there is nothing really going up, we're not going to take part in this market. And so we're in cash, which is more or less US dollar based. And of course, that is the strongest asset right now. And that to me is the play. The play is to do nothing and let this volatility shake itself up. As much as I'd love to profit from the drops here, we're still not technically, based on my chart analysis, in a full-on bear market. As soon as we get the technicals to confirm we're in a bear market, we will be selling into the rallies, trading inverse ETFs. But right now, it's still a mix between the market's trying to bottom. It's kind of in a bull market, but it's also on the verge of a stage 3 topping phase and a big breakdown. So when we have these mixed signals, we just step back and we're like, you know what, let everybody else panic and freak out and shake things up and reset. We'll step back in with our capital once we have see some light at the end of the tunnel of which direction we want to go.
Yeah, I liquidated a lot of stuff over the past couple of months myself for other reasons, but also the unease with the market. I kind of hate to put money in cash with double-digit inflation, but what are your alternatives, right?
Yeah.
You have no alternatives. You're not putting it into bonds because rates are going higher. One last thing. Can you just show us treasuries now? 2, 5, 10, 30.
Yeah. Let me pull that up here. I just have what do I have here? I've got.
You could have the latest expiring.
Yeah. I only got the long-term bond here, the bond futures. Yeah. But I mean, they're free falling today, down 1.8%. Let's just zoom way back here on the bonds. I mean, we have seen this huge correction. We're starting to break down. I mean, these rates are just absolutely crushing it. And now I think investors are actually getting on board that, bonds are not a safe haven anymore. Bonds are a high risk play. Yes. The 40-year bull market is over. The falling rates are over. And now we're just seeing everyone liquidate. Today, bonds should be somewhat holding up and they're selling off. They were down 2.5% earlier today. So it's a pretty painful slide for anyone holding any stock bond mix. And that's the whole point of why we do technical analysis, because if nothing is favorable, we don't own anything. If both of them are favorable, we could own both or one or the other. But just kind of hodling, holding on for dear life with the old mentality of, stocks and bond mix and bonds are going to counter it is one deadly combination going forward. And it could be like that for the next 3 or 5 years, maybe even longer, until bonds prove to be a good asset again. We're not looking to touch them. So
that's a wicked looking chart. Proof that, as they say, when markets go up, they take the escalator, and when they go down, they just bungee cord.
Yeah.
So.
Yeah. So this is like you go back to the 80s, 70s. I mean, you see this massive uptrend. We're starting to get into increased volatility, which is huge back and forth price action. You could argue this here is like a stage 3 topping phase. And then we're going to, eventually go down for potentially a very long time and see bonds go out of favor. This was a huge bull market. Volatility is here. And now it could go down, and it's not an asset you want to be holding. There will be some amazing trades, I think, maybe later this year or next year in bonds. I think they'll have some beautiful rallies, but they have to be traded, not just bought and hold, or else it's just a roller coaster ride.
I think there'll be some great dividend plays. Market goes down another 10, 15, 20%. We'll have great dividend plays and great bond plays. And bond funds might be one area that we see some of these hedge funds collapse in because they're moving in tandem downward with the stock market. Could well see that. And it's just, we're in for uncertain times, to say the least. Well, that is it for now. Chris, always appreciate you coming on. Go over to thetechnicaltraders.com, see how Chris does it. And we'll be watching. We'll check in with you in the next month or so, see how the carnage mounts. Chris, you be well. We'll talk to you soon.
Yep. Sounds great. Take care, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.